This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. China is having trouble getting its economic mojo back. In fact, most signals are suggesting they are slipping further behind. But first, this coming week is a very busy one in the US. Not only will they release key labour market data, as JOLTS and non-farm payrolls, and PMI data from the ISM, they'll also release their third quarter 2024 GDP result, and it's expected to grow by 3%. All this while some megacap companies release third quarter earnings results, any one of which could be market moving. And Japan will release its policy interest rate decision this week. China will publish its official PMIs, and the EU will chime in with PMIs and its GDP result too. Australia will release its third quarter 2024 CPI result on Wednesday, expected to come in at 2.9%, which will be lower than the 3.8% in the second quarter. The RBA next reviews its policy rate a week from today, and all indications are that it will hold it at 4.35%. Over the weekend, there were two Democratic election results of interest to us, and in both cases, long governing parties were defeated. This wasn't unexpected, however, although the results were a lot closer in both cases than pundits expected. In Japan, the current Prime Minister may be able to hang on by adding a third party to his current two-party coalition. In Queensland, the switch was clearer, although not as brutal as was widely expected. In China, official weekend data showed that industrial profits were 3.5% lower in the 9 months of September than in the same period a year ago. This comes amid persistent weak demand, deflation risks, and their property downturn. But just looking at September alone, profits dropped 22% from the same month a year ago, so the bite is on. It seems unlikely that Thursday's October PMIs will be very encouraging. And foreign direct investment into China for the year to September slumped too, down 30% from the previous year, although on the year-to-date basis they favour, that was a slight easing from the 31.5% fall in August. For the month of September, the inflow was just $14.2 billion, and a huge step down from the $540 billion that flowed in September 2023. But at least it was positive. Leading Chinese economist Zhang Yu has raised the alarm over falling consumption in the Chinese domestic economy. Consumption is under pressure even though Beijing seems to be making big efforts to boost it. In the third quarter, retail growth came in at just 2.5%, while in the megacities of Beijing and Shanghai, it turned negative in the months of July and August. He points out that domestic consumption's economic contribution ratio dropped to below 50% in the first three quarters of 2024, as compared to 61% for the first half. That's a very rapid shift. Exports have held their growth level up so far, but that isn't continuing. The shriveling consumption puts China's economy in some sort of peril, and Beijing seems to have no answer so far. They've used half of their support measures already. Hopefully the next half will work better. Across the Pacific, American durable goods orders slipped slightly in September from August, but by less than analysts had expected. But that takes them 2.9% lower than a year ago. Capital goods orders retreated 6.5% year on year, but non-defense capital goods orders other than for aircraft were higher. The University of Michigan Consumer Sentiment Index was revised up in October from their earlier flash result, marking the third consecutive month of rises and reaching its highest level in 6 months. And the same survey found little concern about future inflation, with expectations at 2.7%, and that's its lowest level in almost 4 years. And the Dallas Fed factory survey was much improved in October, its mildest contraction since the sag that started in May 2022. This was driven by a sharp improvement in production activity. However, the recovery in new orders was much weaker. A very well-supported US Treasury bond auction early today brought a median yield of 4.07%. That was an unusually large rise from the 3.46% at the prior equivalent event a month ago. There was a 2-year US Treasury bond auction as well, also well supported, but also the median yield jumped just as much there too. In Canada, retail sales rose again in August, mainly on the back of more optimistic car buying. While the overall sales gain is low, it is the third month in a row they've reported a year-on-year rise. The US Treasury 10-year yield is now just on 4.29% and up 4 basis points today. And Wall Street is reporting results for the third quarter, and so far they've stayed very strong. And the price of gold will start today at $2,743 an ounce and down $5 from yesterday. And oil prices are down a very sharp $4, just on $67.50 a barrel in the US, while the international Brent price is just under $72 a barrel. And the Kiwi dollar starts today at 59.8 US cents and unchanged from this time on Saturday. Against the Aussie, we're up 30 basis points at 90.8 Australian cents. Against the euro, we're down 10 basis points at 55.3 euro cents. That all means our trade-weighted index starts today at just on 68.8 and up 10 basis points from this time yesterday and from Saturday. And the Bitcoin price starts today at $68,821 and up 1.6% from yesterday. Volatility over the past 24 hours has been modest, just on plus or minus 1.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.